Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everyone. So I gotta apologize, I'm a little late here, but I'm having a problem with one of my lights. So let's go through the charts here really quick. Market is gonna be really weird today. So Treasury, they're on the downside at the moment. Not too strong of a movement in the treasuries. When you look at, well, let's come back over here. There was this big spike before the holidays. Basically, Russia shut off the oil pipeline, right? I mean, we had the big news in the morning, but then Russia shut off the oil pipeline. So you can see here at the end of the day when that happened. S&P 500 got slaughtered. I'm actually seeing natural gas prices over in the U.S. at least going down. Silver and gold sideways. Copper may be recovering. Oil taking a hit this morning. That's curious. As not many of the assets looking the way that I thought they would be. Bitcoin still going sideways. And the big one, man, the dollar up at almost 110. Almost 110. How is it? Brad Messerle says, how crazy is that? You must be referring to how is natural gas down this morning in the U.S.? I don't know. Oh, you know what? You can't even see anything. Oh my gosh, that's hilarious. Not that one. That one. That one. Natural gas is down. How is that? I go back through them. 10-year, ES, oil down, natural gas down, gold and silver kind of sideways, maybe pressure to the downside. Kappa. I don't know. That don't make sense to me. Seems to me like with Russia shutting the gas pipeline off, that gas should be up, and it should be up everywhere, but that's not the case. So now we got to figure out what the hell is wrong with my light. I bet you that the cord is busted. Yeah, I think that this cord is going. Oh, you were just referring to Russia cutting the pipeline off altogether? That alone is kind of crazy. So, man, trying to sort this whole mess out politically is like, I don't even know where to begin, man. Appears to me as though gold is made it slow for the day. I don't know about that. What makes you think that? I tell you what, the gold market is a very difficult market to trade because the supply demand dynamics in gold are a little wonky, and then its correlations kind of at least at current just always work against it. They just always work against it. It's really annoying. You're always driving. It's fine. Focus on driving. Now, this slide over here is not. There we go. I think I got that all situated. So, like, here's what I thought was really weird about the whole Russia thing was that the news was that they shut the pipeline down. At first they were like, "Oh, it's we have to shut it down for maintenance." And then they later admitted, "Oh, no, we're shutting it down for political reasons to pressure you." So I thought it was weird that they did it like that. But then the other thing was that there was like these news stories this weekend that Russia was pushing really hard for an in-person meeting and, to try and broker some sort of a peace deal. I wonder if perhaps the situation is that things are just really not going very well for Russia and they're trying to put pressure to try and get the conflict ended. I don't know. I mean, maybe in the end this is a good thing. Like maybe this means that we're close to the end, but and then if it's not, what do the political leaders in Europe do? Because basically everything that I'm seeing is we're going to have all of these market interventions and stuff. And it's a little alarming to me how quickly people get into the yeah, we're just gonna, we're just gonna backstop the market. Yeah, we'll put a cap on everybody's energy bills. This sort of a thing. It's just maybe that's the only choice that they have. But I keep seeing governments do these sorts of things and thinking that like there's no consequences to it. You know what I mean? Business helpers, how do you get your? Well, you go to speculatorseth.com. No, I have no clue what he's talking about. Anyways, and then the political situation in the US is really interesting too, right? I don't know if you saw my TikTok about that yesterday, but Joe Biden is going on the Republicans are evil. Well, not Republic. He says that it's more nuanced than that. It's Donald Trump supporters or MAGA policies that are evil, which is really quite silly. Well, if you really think about they've kind of walked things back a little bit, and if you really think about what his walk back was, it's actually a little silly. It's like, oh, having an abortion laws that are pretty similar to what they are in Europe is extreme. Okay, but I digress. That doesn't happen by accident. When it's September, like that first week of school is when you want to get your political messaging out, right? So that's the narrative they're pushing over here, and like everybody knows it. That's the thing that's weird about it is that everybody knows that that's what he's doing. And like the Democrats are like outright talking about it and like laughing about it and think that it's great. But it's probably not going to change things. So we don't need to worry about the US elections too much. I don't think that it's really going to have much of an effect on the markets. So that means that we can kind of focus in more on the political situation in Europe. And the question is, can the political parties in Europe survive with what is on deck for winter, right? I mean, really, winter's looking kind of ugly. Although it must be more nuanced than I initially thought, because I really thought that natural gas would be up big today. even here in the United States, because that usually does have spillover effects, but it appears, at least so far today, that's not the case. Why is it that sometimes when you ban somebody on Discord, sometimes you don't it doesn't delete all of the messages. It's really annoying. Deletes some of them, but it doesn't catch all of the messages for some reason. Okay, well, Treasuries had a pretty good downside move here to begin with. They are backing up. Liquidity a little bit lighter this morning than it was last week. We're back to thousands. Anwar says fix. What do you mean? Priced in? Well, what I think is really weird is that the S&P 500 really took a dive on Friday because of it, but I'm not seeing any of the other markets really having a strong reaction. And everything that I read this morning, like in my morning rundowns that I go through, kind of suggested that the markets were waiting for the US market to open before they decided what to do. So to see them where they're at this morning is a little weird. Okay, how do you get your price numbers so large on the S&P 500 chart? So I have here, if you go to properties, and that's where you set that stuff. So you go to properties and then the font right here, and I just changed the font to be really big. I got a couple of other things there on the chart that might be interesting to you. So I have an indicator. Oh, I haven't? No, I did put this up. Okay, so I have an indicator. SPSF, that's what I put for my free indicators. Watermark, and that puts the watermark out there. So there are like free watermarks out there. I'm not the first one to put a watermark out, but I used a little bit more advanced of a method to draw it, and in a way that ensures that it is always drawn behind the chart. Because the ones that I was seeing, they would actually like draw over top of the chart sometimes, which was really weird. And you can put custom text in or whatever. So if you go to speculatorsept.com/free.html, you can sign up for newsletter, and the free pack that it sends you in the mail to your email has that indicator. It also has the line at time one. You can't see it, but it draws a line at the open because you kind of had some issues about when do you want the line to be drawn and so forth. So I just fix it so that it only draws, this way you only see one on the open, the S&P 500. So that's kind of nice. And then I have open, high, low, close bars. Previous days, open, high, low, close, rather. So I think those are all the things that I have on this chart. I tell you what, I'm not, I don't always love NinjaTrader, but it really is the best charting application in my opinion. It's like little teeny tiny things here and there, but it is the best charting app. Let's zoom back in here. Yeah, so I also uploaded, I haven't put it out. Yet. There is, we got some things going on. I don't know if it's going to be this week or the next week because they're still, waiting on something, but I have an update on my indicators and stuff coming that addresses some interesting subjects, let's just say. That was okay. Oh, 04. I should have reset my DOM a little earlier because I can't tell how far back it came, but I'm a little worried about trading the market. Like, something kind of is hinting to me that it's going to be another down day. If we're going to see problems with energy in Europe, I think that probably that's inflationary, right? So wouldn't we see selling in the treasuries? It kind of seems like that's the way that they're leaning, but I'm the liquidity in particular is a little troublesome to me. I'm really liking your range. Oh, thank you very much. Yeah, so one of the things was that I kind of cleaned things up because I had a lot of like little indicators that I had released like on one-offs, but back then I didn't have them like in separate folders and stuff like that. So what I've been doing is I've kind of been cleaning things up and separating them into different projects. So the the free version of the range histogram is in there as well. So the thing that's cool about the range histogram is the free one is that I'm giving you the code. So you can make your own range histogram of any subject that you want. And I've been working on, or I was working on a change to it. Like what I wanted to do was I wanted to show like what is the kurtosis of that distribution, but I've had trouble understanding the math. So like the thing is like you get a clear distribution. How do you determine what the equation for that is, right? And then once you have an equation, then you can like there's ways that I know of, like we can use Taleb's measure. I really like it, but I don't know how to get to that point yet. So, but the paid version of it has a couple of extra things like filters and all sorts of funky stuff. So helpful to arrange the data that way. Yes, I'm trying to modify the code a bit to use the distribution on other stats. Yeah. And I found that it's really easy because all you got to do is recode the the on bar close method, right? Change the on bar close method and like how you determine what the value is to stick it into a bucket because it kind of helps to quantize it a little bit. But yeah, it's not too hard. I have like 12 different versions of it. And the paid version has like no. So the paid version is what's on speculatorseth.com. So and I don't know if it's included in the package right now. Oh yeah, no, it's not. It'll come out when we put this next video out. But the paid version, like some of the features that are in the paid version, you can change the scale of it. So if you want it to use a logarithmic scale versus a regular scale, by default, it uses a logarithmic scale. And probably might add more to that in the future. And then there's like filters. So you can come in and you can say, I want to see what does this distribution change if you change what the day of the week is, for instance. So there's kind of filters. And but anyways, you get it from speculatorseth.com. There's a 2-week trial, and then a lifetime license is only $100. So it's very cheap. I wanted it to be something that everybody that owns an NinjaTrader could have. That's my goal, is everybody that has an NinjaTrader is going to want it. So I chose to price it for that. Now, I'm sure that in the future, if the indicators get, really pick up and maybe we start putting, at some point, I wouldn't mind being able to like hire somebody Well, if I hired people, probably the first thing wouldn't be to work on indicators. But at some point in the future, I think I would like to make my own platform, to be honest with you. I think I could make a better platform than what's out there. Um, but it would be nice to be able to have people that were more focused on the indicators so that I could be more focused on creating content, you know. But I only wish for the day when I can afford your hardware and software setup. I mean, Anwar, my setup's really not that. Okay, there is one thing in my setup that's like amazing, and that's the camera. Okay, that camera was expensive. Okay, but everything like these monitors. So I have triple monitors, right? Monitor stand was about $100. I think I spent 200 on this one, and like 150 on this one, and then this one I've had for years. I probably actually need to replace this center one soon, but I'm kind of waiting. I'm kind of delaying it as long as I can because I'm hoping that maybe if I wait long enough, I could get one that not only does it have a high refresh rate and all that stuff, but it has really good colors too, really accurate colors. So I'm hoping if I wait a few years, because the colors are getting better, monitors are getting faster, colors are getting better. In 5 to 10 years, they'll merge. But when I see it, there's like these little wavy things at the top. There is a place where the color is kind of going. And then my PC, to build an exact duplicate of my PC right now, probably $600. Probably $600. Like the hardware that I have in my you don't want my hardware. It's old. It's old. It's an AMD 1700X processor, right? Like when did that come out? It's old. That's old. Oh, well, 1700 is still about $300. So maybe I'm wrong about the how much it would cost. It was launched in 2017. 2017. So it's 5 years old. What do you think about ZN? Well, I was kind of thinking that because of the natural gas pipelines from Russia being shut down in Europe and the S&P 500 reacting very negatively to it on Friday, that we would see a little bit of chaos in the markets today, and that might mean that treasuries move down. But they haven't really been moving that way, and liquidity is a lot less than it was last week. So I find that a little concerning. So I am kind of taking a step back and just watching it. And maybe there are better opportunities later in the week, but at the moment, I'm not really seeing anything too strong here. Another thing that I would point out is that like there's like very excessive flattening going on right now. Like the ZB pushing up way more than the other instruments from the lows, right? So that means that we've got to be a little bit careful. Like if I were to come in here in the treasury and take a short, there's the possibility of there being a 4 to 8 tick move against you just based off of ZB spreading, right? So, long story short, I thought we had a predictor for order flow this morning, but it doesn't seem to be playing out that way as of yet. Anyways, the point of what I was saying earlier, Anwar, is that you really don't have to dump a ton of money into having an awesome setup. I mean, I'm not saying that $1,000 is trivial money. It's certainly not. But, I think that somebody might be tempted to come in here and think, "Oh, this is like tens of thousands of dollars of stuff." Not really. I mean, there are other things that I have that are worth quite a bit of money, but they're all things that you guys don't need, right? The lights, each one of these lights is like $100 or $200, right? Got my DJ controller. That's very expensive, but I don't even use that for the stream. Actually, most of these things are like 150, $200. Little devices that I've got. Very interesting to think about. And then there's the monitors; those were more expensive. And the probably the most expensive thing about my room setup is the room treatment. So okay, so we did get a little extension there that I didn't notice when it went to O5 and then came back in the treasury. So that kind of says to me maybe there was a meta order selling to the downside and then they very quickly backed off and they're kind of settling here. But there's often a move in the next 15 minutes. So I kind of keep an eye on it. There could be another sell. Maybe people are waiting for ISM data. Well, we do have PMI later. We have 3-month and 6-month bill auctions today. Actually, we've got a bunch of bill auctions today. Got something in the back. I'm still been a little stuffy. I don't know if it's allergies or what, but I've still been a little stuffy past few days. And it just kind of takes an hour or two for like everything to drain out of my ears. And so I could feel it in the back of my throat. It drives me crazy. And I'm the kind of person like I can't mask. Like I can't if I'm uncomfortable, you'll be able to tell because I just can't. I have to try and clear it or whatever the deal is. Man, dollar is on the move. Above 110. Remember when we were asking if the dollar would get above 110 before the end of the week? I don't think they quite did they? But they're definitely above it now. Morgan Stanley's Wilson sours on U.S. earnings amid growth jitters, reports Bloomberg. Strategist sees 2023 earnings falling even without a recession. Expects the S&P 500 to drop at least 13% more in the fourth quarter. So, for me to be making a call that the S&P 500 is going to drop 13%, I would need more than just earnings. What's this? Treasuries today yields higher inside Friday's rally range off session highs as Eurozone bonds rally, with ECB meeting ahead Thursday. Yield curve flatter, coupon auctions resume September 12th mean time. Corporate new issue calendar is key with a 50 billion week and $150 billion month anticipated. Oh, wow, really? I don't know where they getting that from. Oh. This guy is the Bloomberg reporter for interest rates, so we should follow him. It's really hard to get that kind of information, so that's we should pay attention to that. You know what? We should turn the music on. I always forget about that part. It's really not a part of my routine yet to think about the music. We'll do ambient, keep it chill. CNN Politics, the battle between Trump and Biden redefines the midterms. Of course, that's what you would like. Yeah. Val, good morning. How are you? Does it redefine the midterms? I think that at least in the short term it does. I think in the short term it has. And the thing is that had happened before Biden had said anything. So I don't know if you're actually going to see any change in the polling, like looking for post-Biden speech. I don't think that you're going to see that very strong. It is going to be interesting to see this week what the polling says on Joe Biden's speech, because I really think that like what he's doing is a little too obvious. But turn on tractor. I should. If I had enough quality royalty-free music to play, I would maybe do that. And maybe if I had a different desk. I'm working on getting a different desk, and then I would have that stuff a little bit closer to me. But anyways, it'll be interesting to see what the polling is post-Biden, but I don't think that the larger races that you're going to see too much of a change, because you already saw that change. But the problem there is that it seems at the moment that there's a really strong likelihood that there will be further changes redefining the race. So will the race become redefined as energy concerns, both in the Europe and US? And that would really, really hurt Joe Biden and his party, wouldn't it? But on the other hand, maybe Russia pulls out a peace deal somehow in the next 2 to 3 months. That would really boost Biden, wouldn't it? Right? So at the moment, I'm kind of looking like the US political race isn't too interesting. But there are some things that could really flip that on its head and change things, right? And then maybe the markets would react to that, right? Like if a peace deal was signed between Russia and Ukraine, I think that would be really good for markets, right? The question is, this is Mohammed El Arian on Squawk Box. How resilient are we to the mess in China and Europe? The US will outperform other markets, other economies, and other currencies consistently, yes. I think one of the things that's been going on, you know, we're often saying here like, well, why isn't this doing this? And, you know, like they have a housing crisis in China. Why are US markets not reacting to it? Well, I've thought about that a lot over the last few weeks, and the only conclusion that I can come to is that it's ultimately a good thing for the United States. It's meant that the United States currency is stronger, essentially. So, you know, it used to be that when the dollar was going up, that would really hurt stock markets, but it hasn't been the case in this environment because that has meant more money to go into stock markets, and so it's kind of evened out. And I think that might be going on. But that could also be a problem because you always got to remember that, like, orders are what moves markets. So that's definitely something that explains the orders that have been going through. That might not be reflective of the overall fundamental situation. It was just like I was saying, well, I can't go short the S&P 500 based on earnings alone, because what kind of money is going to get put to work in the market, right? So we'll see. Goldman Sachs says U.S. economy looks increasingly like it can avoid recession despite Fed rate hikes, says Markets Insider. Goldman said it's seeing encouraging signs that the Fed can pull off a soft landing for the U.S. economy. That was a good thing to keep in mind, is that the data on Friday was good in the end. In the end, it was positive for the economy, I think. A little bit of pressure in the treasuries, but it's still kind of slow. So, like, that one right there, that reminds me of so many moves where earlier on I would be like, oh man, like, is this going to be the breakout and whatnot? Because it is, especially when you just look at price, it does kind of look like they're going to go for the lows again, and it can snowball. But at the moment, I'm not actually seeing a whole lot of interesting activity in the treasury. It looks kind of dead. And if it goes down, I'm not sure that I would say that that's like a large meta order that's going to create a strong trend or anything. Like, it looks like market making right now to me. Looks like random action in market making. All banks are deleveraging. Well, there's definitely a lot less liquidity out in the markets, right? We really should be seeing more than 1,000 lots out there in the treasury market, man. It should be, it's not summer anymore. Usually it thickens up a little bit and we're putting up 2,000s, or at least relatively speaking, we'd be putting up 2,000s. So what does that mean? Well, that means that there's not very much leverage out there for people to own the treasuries that are necessary in order to hedge the futures and provide that kind of liquidity. That's what it means. So it's not a good sign, isn't it? And what's going on inside the banks with the loans themselves, that's difficult for me to know. But you'd have to think that they're at least tightening, right? Uptick. Looks like gold was faking up. They get hit here. Well, I mean, let's see here. What was it when we started? 6:30. Yeah, 1722. Now they're down to 1716. The 6J is kind of on the downturn. So something that I think is a little weird here is that most of the components to the treasury market I'm looking at are pointed to the downside, but the treasury is not going with it very strongly. So like the Japanese yen in particular looks very strongly tilted to the downside. The dollar looks very strongly tilted to the upside. And I wouldn't say it's quite so strong in gold and silver, but they are pushing down new lows still, much more persistently than the main treasuries. Could it be that there's a little bit of the bid in the treasuries though, because the dollar is strong? It must be something like that. Also, we're seeing a little bit of a bounce in oil here. So that's curious. Jeremax, where have you been? It's been very, very long time, hasn't it? Oh yeah, that's right. That's right. Oh, you changed. When did you change it? Oh wait, but even and now I'm a little confused because I'm like, no, that's a name from way back that I seem to remember though. But maybe that was your name before and then you changed it and now you've changed it again. Yeah, I agree with you, Randy, that Chinese buffet music was a little bit like, This one's cool. This one's cool. I'm gonna like this one. I could see myself using this in the background for a video, yeah? It's a little bit like contemplative and like inspirational, I think. I need to learn to look to make music like this. Everything that I do is too trancey. Everything I do ends up becoming trance. Oh, okay. So there's a blog here on Jigsaw Trading I'm reading, and they're talking about some of the things that are coming, you know, into the end of the year. And one of the things that he was noting is that COVID could ramp up in the winter again. It's a good point. Oh, that's right. I do remember that. Which I don't know why. Well, anyways. That was an odd down tick. So I'm always, you know, sometimes it's kind of hard to describe because you don't catch everything that happened, but it's like tick, 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 tick. So like that down tick, there seemed to be other level 2 changes that occurred because of it. You got 10 subs because of it. I always look back at like, how did I build the channel to where it is now? And it's a little crazy to think about because we're like almost to 8,000 subscriptions now, I think. I don't feel like we've had that much success that we have 10,000 subscriptions. But the thing is that the video that I got coming up here, I recorded it, I edited it, I got like everything's ready, but you know, I'm working together with somebody on it, and they are waiting on some things. So I don't know if it'll be this week or next week or what, but it's a big deal. I'm always like nervous about like overhyping things, but like this is like the biggest video I think I could possibly think of making. Aside from like having the opportunity to interview Warren Buffett or something, you know, if there was something crazy like that. But in terms of like the content that this channel covers, this is one of the best pieces of content that we could do. And I think that the channel is going to grow substantially from it. Yeah, so it's still, even though there has been a couple of downticks and stuff that seemed significant, it's still kind of playing those market maker games with me. Doesn't look like it's actually that active or ready to make a trend. Trading Floor Audio retweets market MNI market news. Hawks and Doves see the ECB taking rates to neutral by the end of the year, but disagree on how to get there. I got 10 subs from a hint. Or are you looking for a hint on what the piece of info or what the video is? I don't know if there's anything that I could tell you that would like it, make it more enjoyable to try and figure out what it is, but as long as we do not open or bid above 39.60. Those are kind of interesting prices that you give me, but well, the 60 has acted as resistance this morning at least. Or rather, it's turned down there a few times. I don't know, with the way that is, that's not necessarily significant. So when the S&P 500 opens up here in 15 minutes, it's gonna be weird. I think that we're gonna want to watch it closely. Let's see how they end up taking this, because it could have implications for the rest of the market. You've been learning guitar for the first time? That's good. You know, I've been worried about like, well, I'm what, 37 now? And late 30s, late 40s, like your brain changes and your neuroplasticity is not as good as it is before, right? And that kind of makes me nervous. You know? Like, I think if you keep exercising, that helps, right? There's other things that help. Is that maybe not as big of an issue for me as other people? I don't know. Because I kind of feel like that's a lot of my advantage in trading has been my ability to adapt and to learn new things. And there's still some significant things, especially on the math side, that I would really, really like to learn more about. And math and statistics. I don't know. There's like 2 downticks there. So, and the dollar dropped there with that. The dollar's dropping there. So I'm not seeing like large meta orders or anything like that in the treasuries specifically, but I am seeing that in some of the correlated assets, and maybe that does in the end cause a trend for the treasuries, but it's difficult for me to know because of the way that it's happening, since doesn't look like it's being driven by the treasury. The ages of chess players beyond a certain age, ability to play chess falls off around 37, I think. Really? That's interesting. So they touched the bottom of the range here. But it's still giving me that, this is just market. You know, like every time that it ticks through, it's like hardly anything. Well, I guess there was 1644 is probably, in this current action, was probably significant at 02, but. Good morning, Octavius. How are you? Did you wake up a little late today? You like this song? It's okay. The stream beat stuff is good, but the problem I have is that they're too short. too short. You need like 7-minute songs. But for Spotify, it's probably the best way. Here we go. Despite evidence for an increasing importance of cognitively demanding tasks in the workplace, little is known about the life cycle performance in such tasks, particularly over the long run. We estimate the life cycle patterns of cognitive performance over the last 125 years using a methodology that is based on a comparison of individual move-by-move performance of professional chess players relative to the best moves suggested by a chess engine in a given configuration. The findings document a hump-shaped profile of performance over the life cycle and an increase in individual performance, particularly at younger ages, that is associated with dynamics of... Oh, okay. There you go. I don't know if chess is the best comparison, though. Scroll down to the picture. Share of optimal moves I see, and it peaks at 35. Oh, that's weird. Well, this is kind of what I'm talking about, though. It's just what the heck? I tried to open the pen up, but it didn't come. There it is. So, like, this is like your fluid fluid intelligence declines, and then here is where your crystallized intelligence is rising. So that's kind of interesting. It's not too late for what? I have too many things I want to do, man. The thing that's continually driving me crazy is that I want to be going hardcore all the time. I want to, okay, we're trading. Okay, we're done with trading. Morning stand up, study a little bit, get all the work done for the job, work out, come back, study more, go to, you know, like I want to do that every day. And number one, I don't think that my body can handle that necessarily every day. I mean, I did it for a week and I got pretty good. But last week I was a little bit more rest. But then the babies. So like I wasn't able to really do a whole lot other than make my video and edit it because of the babies. And this 2-year-old is, I really think he's autistic to some degree. Because anytime that you want, like if you want him, he's in the mode of, I don't want to wear my diaper. So you force him to put on the diaper and it's just autistic screaming. And every other child that I see that's his age is like speaking in full sentences. So I'm thinking that I'm probably having to end up spending more energy on him than a parent normally would. Yeah, Tick Buddha in Discord pointing out that there are news events in 15 and 30 minutes, so it's true. We do get some PMIs. Those, I don't believe that those are like top tier news events, but I do think that they could be key drivers of the action today. The only one that I have an estimate on for that is US ISM Services PMI estimate 55.4. Well, I haven't noticed. So for instance, I have been spending a little bit of time practicing and learning Vim more and more. I would like to, I was thinking about like re-keybinding like everything but I think I've found a key binding setup that works a little bit better. The one that drives me the craziest the most in the default Vim key bindings is that Y and P are the keys that you use to copy and paste. So they're on the wrong hand. So if I do want to use the mouse to select things and copy and paste and stuff, doesn't work. So I changed that and just change it to Control C, Control V. And maybe that's good enough. But I've been practicing that, and I haven't had much trouble memorizing things or changing my setup or anything like that. So I feel like my ability to adjust and learn new things is still there. But the idea that like, oh, you try and learn it and it just doesn't get retained is a little scary to me. But I think that the more you do it, and especially if you're exercising, that helps you on that front, right? And even though it's Tuesday, I probably will do that because I skipped yesterday and my legs are feeling it. They want to squat. They're like, Seth, we need to go lift heavy things and throw them around. Meditation. Well, meditation is, I think, really good for trading, I've found. So the thing that I've found with trading is that your emotional state can very much affect your decision-making state. Now, it's interesting the way that this plays out because for technical traders, man, for TA traders, the way that they're the ones that are always focused on this sort of stuff. And I don't think you can... I think that the signals that you're looking at are mostly noise, and so the data and everything that you're trying to sort things out from, it's mostly noise. And I think that that's where I was for a really, really long time. But now that I focus mostly on predictors of order flow and stuff, you know, I'm able to go back and really say, okay, what really were the market conditions at the time, and what really were the pieces of information that I could have traded off of? And was I able to make effective decisions off of that? And from there, I can see how like the emotions affect it. So like one of the things that I've done is that you will get into a rut, and you'll start once I get into a point where I see that I'm making poor decisions because of that, I just don't trade for a little while. Or at least not live, to let the chemicals even themselves back out. And when you meditate, that seems to like cleanse the palate, you know? So once again, so that move down there in the treasuries was a little bit faster. It's still a little iffy though. Yeah. Yeah. Like the psychology is so interesting because yeah, the psychology is a really important aspect of it, but unless you have a real edge, it's completely useless. Radical renewal. Yeah. Well, the issue is that I think that the reason why a lot of people get into the mental aspects of it is because they're not really having success with technical analysis, right? But it's almost the exact opposite once you have like real predictors of order flow. Once you have real predictors of order flow, it starts to become really obvious how fickle your mind is in the moment, right? Okay, so that was new lows. They did trade over 1576 to get to those new lows. The 5-year and the 30-year are not at new lows, so it is the 10-year is leading them lower. That's curious. And the S&P 500 is selling off pretty hard here going into the open. That's weird. Oh yeah. No, somebody has sold about 6,000 contracts here in the last 5 minutes. I didn't hear anything from my news squawk. Let's come over here. Biden said the Chips and Science Act means we are going to build the future in America with American workers, American factories using American-made products. That was about 1 minute ago. U.S. Labor Secretary Walsh, the U.S. does not have enough workers to fill all job openings. That could be seen as a hawkish comment. The treasuries did get pretty good excursion on that move lower too. That one we're above 3.25 again, huh? Almost to 3.3. Well, what was the low from like what, Thursday? 115.23. Down in here would be like new lows. They are trading more volume. I feel like I kind of already missed the move to some extent, but I am getting some hints now that it could continue. There's 3,000, right? So they've definitely got the volume. Although that's very likely to create a liquidity hole, isn't it? And we still got news coming up, right? What would you say to the people that think price ladder trading is outdated? Though I've known of some quants on YouTube like Coding Jesus that are vehemently against TA, order flow, or anything retail intraday. Well, so I think one of the issues is that a lot of people were just applying technical analysis to order flow, right? So particularly volume profile or like specific scalp setups, we would call them, like the no BS day trading setups, for instance. Was a good example. You know, like I did quite a bit of, you know, like sampling on these. Okay, when I saw this and I took it, and what were the stats on it, and I kept my stats on it pretty what is the word? I was really diligent for a long time, let's say. And there was periods where they appeared really effective, and then the market would flip and there was periods where they weren't effective at all, right? So it seems to me that those were all setups that were profitable at one time, but there's like too much competition for them now. It's like if you're at the front of the queue, you can make money with those, and otherwise forget about it, right? The market is statistically efficient. So but I think that is what is the word that I'm looking for? Just because a certain thing is no longer profitable doesn't mean that it can't be a part of an effective strategy. And particularly as it pertains to order flow, because it is the orders themselves that move the markets, it is really, you just can't know what is actually going on in the market without watching the orders. So even though I can't just watch the orders and come up with effective trades based on that reliably, doesn't mean that being able to see those orders and verify what I'm seeing in the market is not an essential part of a strategy, right? So there's that side. The other thing you got to remember is, like, what kind of a quant are they, right? So Coding Jesus, for instance, I don't know too much about him, from what I have seen, and he doesn't really post anymore, does he? But they're doing derivatives, right? He's doing a Citadel like setup where they're pricing in, they're taking advantage of mispricings in options, right? Using advanced statistics. Mispricings in options. So, hold on. I'm having a little trouble speaking this morning. Well, I listen, I don't regularly watch him. I see who gets recommended on YouTube for trading things, right? It is my problem is usually when I see people on YouTube that are in trading related things. Most of the time I end up sitting there going, well, I know more than you. He's gonna know more than me about a great many things, but I don't think that he knows market microstructure very much. He's not doing HFT, right? Like the kind of person that I would be looking to that would be like, knows a lot more than Seth about the subject that we're talking about. It's going to be somebody working in HFT, and he doesn't do HFT. There's also this quant guy on TikTok that's really good, but they're doing more portfolio level strategies, and he's doing cryptocurrency arbitrage, right? So that again is very different. They're giving me a baby. He's asleep, but we'll see for who long. Coding Jesus, yeah. But anyways, what I was saying, coding Jesus, as far as I understand, is not do high frequency trading or market microstructure kind of stuff. So that's the first thing, is that they're going to be biased towards, oh yeah, you can't make money, you can only make money off of volatility, and they're trading options. That's their strategy, right? So they're not going to know about the inefficiencies that are created by market microstructure and how essential watching order flow is to understanding what the market is doing. They're not going to understand, they might have some idea of being able to trade the news, right? But they're not experts in that. That's not their focus. So they've probably heard of people talking about it. But I really think if you're going to come in, you're going to trade the news, you're going to trade predictors of order flow, that sort of a thing, because there are edges available there. You have to be able to see the order flow to verify that you're seeing what you actually thought you were going to see. Today has been kind of difficult because I did think that it was going to go down. But I didn't really quite see the order flow that I wanted. It did seem, though, the way that this went, it looks to me like somebody came into the market about a minute before the S&P 500 opened up and was block selling a bunch of different assets, because it looks like they sold the Treasury and ES. Although I'm not so sure if it was the Treasury. It might have been a correlated asset, because the volumes, well, there was some spots where they did trade some heavy volume and the Treasury wasn't there. So that one might have been that the liquidity is just too light to see. But Tobias, yeah, it was weird that they sold 1 minute before the open. And the S&P 500 did recover the initial move and is now extending further to the downside. Which is like, And the Treasury's not backing off either, is it? Well above 3.3 now. That was like 20 basis points ago. That was not 22 basis points ago. Hi. This baby will not lay in my arms and be tired and sleep. Daddy is too much fun. We got a little booger there. Let's get that. Well, there's still some volume trading here at 24.5, and there are some large offers above us now. And the liquidity overall in the treasuries has improved. I don't know when that changed. That is, oh, I wish I was paying better attention to note when that changed. That could be a sign that a large player has gotten involved in the market and is doing block orders today, and you'd have to assume that it's selling. The selling in the ES, it's only been about 1,500 more since the open net selling, so don't know what to think about that. Here, 23 again was the low from last Thursday. So I'm sure there's going to be a lot of people paying attention to that spot. We might get a little bit of back and forth there. It's really interesting to me that the treasuries sold the way they did, because, you know, you had been seeing some pretty consistent moves in the dollar and the Japanese yen and stuff, and it wasn't going. And then treasuries went on their own without anything else moving with them. Well, except for the S&P 500. Although, should you get a stream deck? For why? To trade with? Yeah, if you want. If you were going to do it to trade with, I would go and get like a MIDI fighter. You got a trampoline, it's dank. What? Okay. Why are you looking at me like that, little one? Yes. You think it's funny? Yeah. I'm a little bit worried about possibility of reversal here. Okay, so oh, that's really weird. That must have just been the pull for the PMIs. Do you see, like, the market got a lot more liquid all of a sudden? A lot less liquid all of a sudden? This is so sad for Bed Bath & Beyond CFO. The whole Bed Bath & Beyond thing is crazy, man. What's it cheap? MIDI fighter is, I don't know. What do you consider cheap? A keyboard is a good cheap option. Yeah, there you go. There's the pull. But that's in a very illiquid market when they had just like pulled everything. So I'm probably hands off here since I got a baby. $30 a keyboard. just use a keyboard with optical keys. I don't know if you can get one of those for $30 though. Okay, so the PMI was slightly down from what was anticipated. So services was 43.7 versus 44.2, and the composite was 44.6 versus 45. So now we await the services PMI at the top of the hour. Estimate is 55.4. But the market pulled back considerably after that. I am not seeing the liquidity come back yet. Might wait until a minute after the news. Let's see. What's wrong, buddy? You want the binky back? Yeah. Big buttons. I think I would want to do as a MIDI fighter. I don't know. I don't know if I could see myself actually buying and selling with that kind of setup. She'd come back and she's not getting the baby. Well, they come back down to the bottom there very easily. So the market is still extremely illiquid in this location. I don't like that the liquidity is pulled off of that. We're seeing some shady things in liquidity this morning. Spoos still selling hard. One has to wonder at what point so why are the spoos selling, right? So the headlines that we've heard this morning have been like people are souring on earnings, all of these sorts of things. So if the S&P 500 was falling because of lower earnings, for instance, that's something that I think would be a net positive for the treasuries, or rather would be a net buy for treasuries. But that doesn't seem to be the case. What we've been seeing here is more consistent with the Federal Reserve is going to raise rates and push us into a recession sort of a thing. But I don't think that the treasuries were the ones that initiated it. I really think that the S&P 500 was the thing that first started moving. Does NinjaTrader 8 have a visual stop loss take profit box like I've seen on TradingView? I'm not entirely sure what you're referring to, but in NinjaTrader, if you have orders outstanding, they show up on the chart. Okay, find one. Well, she says he should be tired, so I'm just gonna walk a little bit. It's like you click where you want to get in on a chart, and green and red box shows, so it shows where you're getting in, and auto puts in stop loss and take profit. So I don't think that it works exactly that way in NinjaTrader, but it's roughly, you can get roughly the same effect in NinjaTrader. I mean, you can see where your levels are and all that. He should be sleepy, but he doesn't look sleepy to me. Okay, so oh, I thought it was too late for the PMI, but I guess we're okay. Well, market is maybe cooling off. That might just be because of ISM though. Or sorry, PMI. Yeah, ISM PMI. Man, liquidity really pulling for that news. Ouch. Higher than forecast 56.9. Ouch. This is awfully impulsive there because of the liquidity though. I could try hitting them right there, but I feel that because we had already had a lot of downside movement into this move, I am seeing a little bit more trade down there than I would expect given the current liquidity conditions. That kind of looks to me like maybe could be some profit taking. Why would you use something like that to enter orders instead of your keyboard? You're crazy. You're crazy. I don't think... Okay, there's a little bit further move. Like, it's really tempting to hit them at 332, right? Hmm. 2,000 offer at 18. Iceberg. 2,300 iceberg at 18. Ouch. So I was saying maybe you take it at 33. Look, somebody swept all of the liquidity through there in the micro. Looks like it's going to come back a little bit though. And they did make 18 go bid too, by the way. Interesting movement. S&P 500 is pushing higher, probably because that number. So again, oh man, U.S. ISM Services PMI 56.9 versus 55.4. Not a huge beat, but a beat nonetheless. Which means the Federal Reserve may have to be more aggressive with interest rate increases, although I would argue that these numbers probably don't matter very much in the larger scheme of things. It's really going to be CPI that's going to decide what the Fed is going to do next. Still, the market is moving here this morning. Oh man, look at that. I think that one was because somebody sold there in the 5-year. does look like that they've formed a pretty solid liquidity hole here at 18 though. Not it's still going. That's a little odd. Because we were at like what? I was looking at 3.33. And then it was like, 3.4 too high. Now it's 3.5. Even though the treasury is still roughly where it was. No. See, they keep dancing across 18. See that right there? Shouldn't we be more like 3.3 again? And the 30-year is coming back too. It means that that the yields and the main treasuries are extremely disconnected. Let's see here. And the dollar, oh wow, yeah, the dollar went from 110.1 to 110.5. 75 will not surprise anybody anymore now. Yeah, probably. All right, let's go look at their tool, huh? Does look like they're coming back. Let's see what they do at 23. Did not really play out in a way that I would have been super comfortable taking a trade on, though, to be honest with you. There was definitely profit potential in it, but it kind of seems to me though like somebody came in and sold the market on the open and they're done already. Like the liquidity that they added is already gone. Okay, so if I compare, they are much more of them thinking it's going to be a 75 basis point hike. It looks like the probability has increased from the 2nd. Is that current date 2/02? That was last Friday, right? Yeah. That was last Friday. And like the probability declined significantly last Friday. It's still not to what they were on Thursday. That might be wrong, you know. That might be like by the end of the day, that might change. And this ends up being higher, so I won't read too much into that. But it does kind of seem like all of a sudden they're starting to converge towards 75 basis point hike, right? But CPI is what really matters still. It's kind of funny, like you get like surprises in the numbers, but to some degree these numbers aren't surprising to me. Like manufacturing is doing absolutely terrible right now because the dollar is so strong, and services is quite good, and the services economy is quite strong, and maybe even too strong, right? We shouldn't actually be surprised by these numbers. S&P 500, man. That's a $50 decline. That's a 50-point decline just so far. So what is that? What the Japanese yen is the biggest loser this morning. Oh man, they took a big dive that last down move too. Next is soybeans, followed by the 30-year and NQ. So what is up today? Well, copper is up. Corn is up a little bit. Silver. Oh, now that's interesting. Because gold was taking the hit, but I guess silver is recovering. Yeah. And that one doesn't make sense to me. Because it's higher than yesterday. Yeah, but personally, I prefer faster rate hikes. Just let's get it done right. I'm not sure anymore if 50 or 75 in September matters. I feel like the macro environment is changing so fast now that we can't really keep up, you know? Plunge in UK government bonds is accelerating rapidly. 10-year UK gilt yield is up 3.1%, the highest since 2011. Sterling sliding to back below a 1.15, now less than a cent away from the pandemic low, just above 1.14. A break below that heralds the weakest level since 1985. Right? So that's one of the difficulties I'm having in trading this environment is that is the Federal Reserve going to hike 50 or 75 basis points? How strong is the economy? How strong is employment? I get that. I understand that framework in that market really well, and I've done really well at trading it. But now all of a sudden we throw in this incredibly strong dollar and all of the problems in Europe, and I don't know how that all gets sorted out. I don't know what you do with that. It seems to me, it would seem to me rather, that the play would be to go long energy, right? And then you come in and energy is all down. Energy is all down. Well, I'll add natural gas on here. Natural gas down 5% this morning. Because China has no demand for energy at the moment, it seems like. Or just concerns about global recession in general. I don't know. I don't understand this market as well. We're gonna have to work hard to get back in top form. Okay, this one is kind of weird. Let me show you this. This is Ninja Trader Ecosystem tweeting this. Oh no, where did it go? They deleted it. They deleted it almost as fast as I opened it up. That's funny. They had this picture that was like the employment situation, the Bureau of Labor Statistics monthly report. So it's like, okay, so you're posting out the employment report from last week and slapping your name on it? What? Weird. Well, we're still on the ambient thing. Yeah, we're still on the ambient playlist, but this track is massive. I think we're not on the Stream Beats playlist anymore. I think it took us off of it. I hope it wasn't. Well, hopefully it didn't show something that will cause the video to get muted again. I hate that. Okay, equity's trying to dig out here. Citigroup's Ed Morsi reiterates his long-held view that oil prices will drop well below $70 a barrel if a global recession develops, and we're headed in that direction. We certainly are. Oil at 86.6 at the moment. Goldman Sachs, on the other hand, says that there's still a global supply shortage and that prices will continue to increase. So I don't know. Well, the problem that I think I have now at this point in terms of taking another trade, of course, we could try to go along with the trend, but yeah, are they going to continue selling, or is that done? Like, there was definitely some big block orders selling us down today, but everything that I'm seeing about it so far suggests to me that those forces are probably already done. So I think that I would have to look to something else, or just hope to get lucky if I'm going to try and take a long and yield here. See, it's able to get down to the low there very easily, though. So I just don't have anything to tell me that it's going to keep going. Sure feels like it's going to keep going, though. Like, I really want to click in real bad. Especially given the time of day, I'm really not sure that I can justify that trade. Doesn't seem to be a long day. Well, it's definitely a sell in the S&P 500, but I would not discount the possibility of it coming right back up to 39.50 by the end of the day in the S&P 500. It's done that a lot, and more Ukraine news. Again, the way that this developed, especially with the selling coming into the market just before the open, that I think is very suggestive of a large hedge fund selling into the market. Large hedge funds not liking what they saw on Friday and saying on Monday we're gonna sell everything. That's what that looks like to me. So if he sold, what's next, right? Meh. Val, to be honest, I don't really care about any of the technical levels that you might have. Not to be mean or anything, but I just don't want you to think that I'm like really looking at them. I almost always ignore that sort of a thing. I mean, I like to point out levels. Like, remember, it was 23, was it? That was like the Thursday low that we were looking at, right? They blew right through that, didn't they? I certainly wouldn't be looking at it as like a let's fade it here or anything like that, right? They're kind of benchmarks to give you an idea on a relative basis how much is it moving, how hawkish are they compared to past days, but I wouldn't try making a trade-off of any of that. It's like if we're in a 5-day buy zone right now, probably doesn't matter. The liquidity is there, they buy or sell. All that matters is the future orders. While I'm seeing enough in the volume here in the treasury that it could reverse, but that's a lot of auto-correlated to the downside sell volume. S&P 500 has kind of been trying to dig itself out of a hole and hasn't quite been able to make it even back above 3,900 yet. Although we do have to wonder if there's maybe some options that might come into play here now in the S&P 500 now that they're below 3,900, right? Thinking is always going off past data from your memory. It's like doing TA with your memory. Well, all the data that we look at is past, right? So really, when it comes down to it, when you listen to what I say about technical analysis, really the thing that I'm taking issue with is the data source, right? The claim that I'm making is that the data that comes out of the exchange is ineffective at predicting the future data. That doesn't mean that there aren't other pieces of data that you can come out with and do a quantitative analysis with and make money with it, right? But at that point, it's not technical analysis anymore, because technical analysis is the analysis of just the price and volume itself. Right? And you can apply technical analysis to order flow, which would be trying to make the prediction. But you can also just analyze the order flow to understand what the current conditions are, right? And that doesn't predict which way it's going to go. But if I know something else that predicts which way it's going to go, if I know what the current liquidity conditions are, I can be much more accurate about how it will actually play out. That's why watching the orders is so important, right? Prices are random. If prices are random, why should there be any support resistance levels based on price? Well, that's the thing, is that prices aren't exactly random. There are behaviors in prices that are different from a random walk. So the reason that price is random isn't because it's like straight up random, but it's because the market's competitive. Everybody's looking for that statistical inefficiency and trading it, and in the process it wipes it out, right? So why should there be any support resistance levels based on price? Well, I think that all of that kind of suggests that there are quote unquote support and resistance levels, just that you won't make any money from them. That trying to trade off of them is not profitable in the long run. And that's what the research suggests, at least. Uptick there. Uptick. Yeah, they're making a decent recovery. There is a little bit more liquidity in the market now, and there's some 1600s at 20. Carl Quintilla tweets, quoting Cap Econ US, the jump in ISM services to 56.9 strikes a further blow against the idea the economy is close to recession, with a weighted average of 2 ISM surveys consistent with the GDP growth around 3% annualized. Well, but again, the problem is that services is going great and manufacturing is in the dumps, right? The big order at 20 did pull. It's all time based. That still sounds to me like you're trying to do technical analysis. So like let me give you an example of where we could say something quantitative, but it's not technical analysis. So what makes it technical analysis? The only thing that I can use for my analysis is a time series of price and volume. That's it. Okay. If I'm using like something like cumulative delta or any of those level 2 indicators, then we're talking about order flow. But you could still apply technical analysis to order flow. Okay. So maybe we can include those other data series, right? That's all I can use. But let me give you an example of something that includes something else. The 10-year treasury has a tendency to go up on the last and first days of the month. So is that technical analysis? Well, I'm including something outside of the chart, right? I have to know what day of the week it is. I know that seems like that's like a really silly piece of information, but it is differentiated, right? What day of the month is it, right? And really, when you think about it, though, it's really quite an effective counter argument to the whole idea of technical analysis, because basically what we're saying is that something as simple as what day of the month is it is more predictive of where a market is going to go than any pattern that you see in price, right? Doesn't none of that put it into perspective for you? That the actual informational content that you can reliably pull out of just a price movement is nada. It's nil, because you don't know why it's moving. You would have to know who was it that executed and why. Now, if you know who it was that executed and why, and you can know that sometimes based on the context of it, then there can be a lot of informational content behind it, right? But without knowing that, what you're seeing on price is cannot be differentiated from noise, right? Jerry Max, I'm sorry, I have to take you off of moderator because I keep thinking you're somebody else, and that's like driving me crazy. I keep thinking you're somebody else. I'm like, No, not you, Val. I was talking about Jeremax. I think what I've done in the past is I really, we never have to moderate. So I've only given people moderator to be able to post links. So he posted a few links for us today. I'm sure at some point in the future, maybe we'll be more popular and it will be a big deal. And if it becomes there, I think that we have enough regulars that we can do that we can handle that, but never been a problem. Well, above 20 now. I'd still kind of call that the upper end of the range since after the news, but the way that it's trading here after the news is, I think, still kind of reinforces that it's probably better for me to stay out. I think this is kind of the action that can really deceive you, because like it is moving, but like, look, I remember I was looking at getting long. I wanted 33 and I was late, so I could have taken 33 half. Would be break even at the moment, right? And that's after 30 minutes. So you're in a trade for 30 minutes, it comes back to you. That's not ideal, right? We would rather have a trend that just keeps pushing, block orders that just keep pushing. Doesn't mean that we won't find other opportunities, because we could come to a point where, and it might be right here where the liquidity above us is just too solid. There's definitely, I mean, look at it's very unusual to see this clear, but there's a lot more resting liquidity above us than there is below us. Quite a bit more. Should probably do that with like a semi-transparent, right? I've noticed that the stream has been picking up now that the summer seems to be over, so it's go time, folks. Let's see here. Joseph Wing, you can easily have a recession, but is persistently high inflation. Recession is a real economy phenomenon where lower growth could come from fewer available inputs. Inflation is nominal and could persist with more free government money. It all comes down to policy response. Okay, so what he's saying there is a little bit nuanced. I think what he's suggesting here is that even with the Federal Reserve raising interest rates, the actions from governments around the world continue to be inflationary. the fiscal response is inflationary. And so you may continue to see inflation be high. I'm a little concerned about this. If we're getting another spike in inflation over the winter, early next year, companies are going to have to raise salaries a lot, right? Hmm. There's still, okay, so they've traded into some of that liquidity. It looks like the big order is still 22.5, so I'm going to reset things right there. That is a funny story. DC tourist gets help from West Virginia coal miners after their electric car battery died. They pushed his car to their nearby coal mine to recharge it. It's interesting now also governments start to support people with their energy costs, which will also be in, yes. I mean, it seems to me like that would definitely be inflationary, right? So when nothing makes costs go down more than costs going up, right? Prices go down more than prices going up. That they'll overextend, and that creates demand destruction, and that causes the prices to come back down. If the government steps in and starts to support things in the commodities market, then that means that natural function doesn't occur and that prices can continue to just march higher, right? And energy ends up becoming an inflationary input into everything else in the economy. See, they learned too much from 2008. In 2008, what did we learn? You buy, if you put money into an asset, that tends to make that asset go up. You go and you buy a bunch of the stock market, that tends to make the stock market go up. The number of actual buy and sell orders in and of themselves is equal, but you're basically coming in and buying and taking out liquidity and displacing liquidity. So the politicians have learned that they have this power, and they immediately start to abuse it. That's what's going on. It's kind of funny because when COVID was happening, the Federal Reserve had to we're like panicking, like, you guys on the fiscal side, you really need to do something. Yeah, you do need to pass a bill. Finally, they pass a bill. Now it's like the governments are passing stimulus all the time, right? Joe Biden spends $1 billion every week, it seems. So, there's another $1 billion to Ukraine. Yeah, it's $1 trillion to students. And then people, there's this legion of idiots on the internet that are like, well, that's not going to cause inflation. It's going to be fine. Inflation is only being caused by supply shutdowns. Well, it's been a year. And the thing is, I think you get one more chance. I think that because I don't think that this next CPI is going to be that bad. I don't think that this next CPI is going to be that bad. I think that it's probably going to be in line with the forecasts. And I don't know if that means the Federal Reserve does 50 or 75 basis points, but let's just say that they do 75 basis points. The market expectation is going to be that the next one that they do in November will be 50 basis points, right? So you get one more chance. But if by the time November and December that we're starting to see it again, or we start to see it again in January through March, inflation come rearing back, then it really does come down to that regardless of how much the banks raise interest rates, there is simply too much fiscal stimulus out there, and it is causing deflation or inflation. And at that point, it will become anchored in people's inflation expectations, and the Federal Reserve will have to create a strong recession to bring the market back into balance. And probably the politicians will have to, there have to be a big change in the politicians, because how do you get the politicians to stop taking out debt? Something that I think is so crazy is that there's a group of people online that have become modern monetary theory influencers. So if I got online and I started speaking positively of modern monetary theory, then there's this whole group of people that would love to support and push my stream. No joke. Would be an easy way to become more popular. But here's the problem with modern monetary theory. Well, there's a couple of things that they do kind of get right. Like this whole thing about what you can do is you can tax more and then have government spending, and that government spending will be stimulative to the economy, but you don't get the inflation because you're taking it out with taxes. Okay. The problem with that is that really all you're doing, the net effect of what you're doing, is you're just allocating the money to a different set of industries, right? That's really what it is. It's an usurpation. Is that the correct word? You're usurping the natural market pricing mechanisms in favor of a more centralized economy, where the money is spent on the things that you want and not necessarily the things that provide the most growth, right? So the whole point here is the reason why you want to do that is because you don't like where the money is going today. And why is the money going to where it is today? Because that's where you get the best return. So you would only want to do this if you wanted a lower return, or you're willing to accept a lower return. That's what the net effect of this is, lower growth in the end, because you're putting money, the government is not very effective at allocating capital. That's what they want. I don't get how anybody can with a straight face support that. It's like, really what you're saying is take the power over the money supply and managing the money supply, take it away from the Federal Reserve and do it with Congress. You want to take the power away from the Federal Reserve and give it to politicians? Are you insane? And it's insane. But there's people that believe very, very strongly in it. It's really crazy. Anwar was saying Milton Friedman said it and it still holds true. I don't know what he was gonna say, but I'm gonna bet that it was that inflation is always a government caused phenomenon. I'm not sure that that's completely accurate, but I mean, I think that there are some situations like after COVID, even if the government hadn't have shut things down, I think that you would have seen supply constraints and that would have caused inflation. Even if the government wasn't involved at all. So I don't believe, strictly speaking, that inflation is always a government phenomenon. It's just the case that because of the way that things are set up, it always ends up being that way, right? Like, theoretically, it doesn't always have to be a government phenomenon, but every time that it's happened, the government was involved. Well, the treasuries are recovering here. They have recovered 23. I was thinking back on there, you know what? This is the way that I think, right? And I only mention this because, like, we were talking about technical analysis and stuff today, right? The reality is, I think, is that our brains want to think like technical analysis, and these are the sorts of things that we do. It's like, well, I don't think that this is a very good place to take a trade. It does seem to be slowing down. Maybe if I wanted to take a trade, the proper trade is to fade it and go the opposite. But of course, I immediately dismiss that because I'm like, well, but why would I think that it's going to reverse? But then I see this and my brain is like, see, Seth, we should have reversed it. Could have been $25. Why didn't you do it? Oh, we were talking about mean reversion during a certain time of the day. So the time period from 10:15 to 10:30 Eastern time has a higher probability of a reversal or at mean reversion. And the theory behind that is that it's simply 1 hour after the S&P 500, that the first hour is the most active, and that time period is basically when, you know, the market gets stuck in the liquidity hole and makes its next move. I think so. Here's another example that we were talking about, you know, here's our predictor of order flow. So we know that there's rebalancing at the end of the month, right? Okay. But so if there's rebalancing at the end of the month, wouldn't you'd be able to see that pattern in the chart, right? You'd be able to say, look at a monthly basis, and then every day at the end of the month, here I can see that spike, right? Well, you would have to know what day of the month it was. So that's a piece of outside information, but it's kind of a trivial piece of outside information, right? But there's another piece, and that is like how much money was input into funds that month. How many deposits and withdrawals in S&P 500 index funds or risk parity funds were there, right? And so you wouldn't be able to see it in the chart. You would have to have that other piece of information. Once you have that other piece of information, you know how much money was input or withdrawn, and then you kind of did a model and graph with that. Then you would probably see a strong, pattern there, right? So that's kind of where I'm going with, like, it's not like there aren't patterns that you can use to predict order. It's just like you can't see them on a chart because that gets arbitraged away. Whereas the moves that are caused by these large institutions buying and selling and stuff, they are so big that we can't arbitrage them away, at least not in the current markets. Of course, if all markets had like 100 times the liquidity that they do now, maybe it would be a different world, right? And then you wouldn't be able to get any advantage from those either. I kind of wonder, though, does there ever become a point? Where would this point be? Where the costs from rebalancing for an S&P 500 index fund becomes too much, that you start to underperform the market and index funds go out of style. You know what I mean? Is that a possibility? I think it could be. If enough people picked up on that's what was going on and always front ran them, it could happen. What I hear, what I'm always hearing is, yeah, S&P 500 index fund is the way to invest, and that will always be the way that it is. And that is immediately is like a big red flag to me. It's like, I mean, that maybe that might be the case right now, but I guarantee you it won't be the case forever. Something changes at some point, right? Maybe the costs become too much. Maybe a certain kind of crisis occurs that really hits index funds hard and causes the politicians to say, well, we can't have index funds anymore. You know, who knows? Wow, Vibe, you lost 400 and then made 400 to break even? That's never fun. Well, that's what happened to me on Friday, right? I lost 40 and stayed in it and made 40 in the end. And I was like, I don't know if that was a smart trade or a dumb trade. Maybe part of why I'm a little bit overly cautious this morning, because I really could have gone short at one point. Like, if I was really looking to be reckless and everything, I could have said, well, I think we're going to go short today. And I could have just been short the whole time and holding it through all of the news and everything, right? Then I would have made money. Then I would have made like, how much would I have made? Let's say 5. So, 325. At 325, that would be 50 plus 30. That'd be almost 80 bucks. Jeez. It was just a test. What are we doing on volatility here today? We're actually still below the average. Although the average probably is a bad measure. And go and use some of Taleb's measures for that. Countries on gray lists, it's complicated to go through brokers. Oh, really? There was one time where I was like, I should go into what are your options for trading in every country, sort of a thing. And I very quickly realized that it's like way too complicated, and that to do that I would need to be able to read the language of those different countries. Like, I was trying to figure out for Salim what actually are the rules. I mean, he knows them, but I was like, what actually are the rules in Monaco for futures trading and stuff like that? Well, I'm sure the information exists out there. It's just probably in Arabic. Well, pull back from 23 back to 20. So I guess in the end, I was correct coming up to this point that we don't have enough to continue trading off of some large block orders did come in and sell the market going into the open. But then remember, I said in the S&P 500, there's still a possibility that they completely retrace it, because if it's just like one big fund selling it, why wouldn't the rest of them just buy it back and say, well, they don't matter, or whatever the deal is. None of this action seems to be driven by a headline or anything, but there was economic news, so it could have been just plays around the economic news. But it seems to me, yeah, Vibe, you're in Monaco, right? Because we have a guy here on our stream that what is his name right now? NASDAQ trader or something like that. But his name is Salim. And he's been around the stream for a really, really long time. And he lives... Is it not Monaco? No, it's not Monaco. It's Morocco. That's right. Morocco. He lives in Morocco, too. He lives in Morocco, too. And he was telling us that, like, you know, his ability to trade futures was somewhat limited. Well, by the way, what did we do with spreads today? Oh, it looks like we steepened up quite a bit in that 7:30 to 8 o'clock time period where they were selling everything really aggressively. And then it flattened back out after the news release. And what about oil? Oil is back down towards the dumps. That's so curious. Like, I was thinking about it all weekend. Oh, okay. This gas pipeline shutdown thing seems like a big deal. Seems like this is going to cause crazy prices in Europe, right? Shouldn't the market just be like flipping out? And yet natural gas over here in America is declining. How is that possible? Well, we know that the Europeans were like bailing commodity trading firms out and everything over the weekend. So maybe it's because of that. Maybe they didn't trade it because of government intervention is a possibility. But I was thinking, well, if we're going to have another really big decline in the S&P 500 because of this, the best way to hedge ourselves would be to be long energy, right? That's not working. So what do we do? Well, maybe that trade would be working out if it wasn't for the government. So I don't know. My arms are looking a little weak. I need to be working on my arms. Guys, it's time for me to get going. I'll be keeping an eye on it today. It's gonna be there. I was seeing some stuff on TikTok from an expert in climate science suggesting that we were likely to have a very cold winter. Because people were saying, well, because it was hot, does that mean we'll have another really mild winter? But they're saying that what we're seeing early on in the polar vortex already is that it is probably going to be cold. So hopefully it means that we get a really wet winter here in the Intermountain West to fill our reservoirs back up. I'm looking forward to the cold. The heat is killing me. You know, I didn't even really think about it. Everybody was like, yeah, it's really unusual to have heat this strong all the way into September. And I was like, huh, that's right, actually. It's usually more like 90 degrees, not 101. Oh my gosh, it's so weird. It go into the Salt Lake City subreddits. Everybody's like, I can't handle it anymore. I'm moving. Okay. It's just always in those subreddits. It's always, we're gonna move. Texas even worse. It's super dry here in Utah right now, I'll tell you that. My lawn is actually faring better this year than it did last year, so. $108 in California. Jeez. Yeah, and then meanwhile, Pakistan is underwater. That's where it all went. All went to Pakistan. Want my water back. No, I'm just kidding. They send it to it, they'll flood us, so you can keep it. Here in, it's like, so I understand why. I think that some people in Utah, they're probably overreacting and everything. My understanding is that there has been dry spells. That when we had the what do we call it? The drought in the 1920s, that Utah Lake almost completely disappeared. But the Great Salt Lake is like almost completely gone. It's like almost completely gone. So I understand why some people are a little apprehensive right now about Utah. And then they're implementing water controls on how much you can water your lawns and stuff. There's, you know. And if you believe that it's climate change and that it's going to be like this and it's only going to get worse, then I could see maybe why you might be panicking. Okay, guys, I am going to be leaving. I will see you tomorrow. Hopefully we get this video posted this week. In the meantime, stay excellent, team.